Hello guys, what's up? This is Glam Rasool, and today I'm going to talk about Pakistan Stock Exchange and doing the top-down analysis on one script. Okay, so this will help you. Let's start. Just get into the market, but before getting into the market, you have to remember that the market accounts for anything and everything. That means anything happens anywhere, market can react to it, and you can't blame market, and you sometimes market reacts even for no reasons, and you can't understand why market reacted. So we have to remember that market reacts, or market accounts for everything. Let's go. Now this is the KC 100 index. So if we put the trend line on on the daily chart, daily time frame, we will see what has been going on for the last okay okay for the last 4 years, right? Right now, you see there was the fake out right here and the fake out right here, and also here's the breakout. Now, this is the breakout, so it can be also the fake out. It can market can come down as fast as it went up. It's possible, but last time when the market crashed right here, it was due to the international pandemic. So we can't blame the market for that. But here at the moment we do not have such circumstances. So we have to understand whether the market is an uptrend or a downtrend. You see, the 200 exponential moving average shows us the market is in an uptrend, and we have to see if the market is, making lower lows and lower highs constantly. So that means the market is in a downtrend. But if the market is making higher highs and higher lows, so the market is in an uptrend. So we have to understand, for example, here the market met this one, the lower lows, then you see the market made the lower highs, and then you can say that here, yeah, again the market made the lower lows, uh, lower lows, you see, and then market kept on making the lower lows and lower highs. You see here also lower lows, and after the lower highs, the lower lows. Now this time market okay, we go to this one. Okay, let's go this one. Okay, lower lows and lower highs, and then this time market met the lower lows, but did not, we can say this was the lower high, but rather we would count this one because this was the higher high. Market met the higher high, and unfortunately market met the lower lows. You see here, now this was the lower low. That means the market was in a downtrend. So from here you see again the market made what, the higher high. So we can count this one, but as we ignored this part, this could be counted to say, but this is more important. So the market has made higher high, higher high. So we would say that means the market is in an uptrend. Now let's go down to the daily chart, daily chart, or an hourly chart. You see on the hourly chart, you saw that was the breakout. Now this is the breakout. So what are the possibilities right here? I can show you. So look, this is the, you could say that the rising wage. So in the rising wage, we have most of the time you see rising wage, breaks down. Just you can see the breakdown right here. So it is possible that the market can come down to this support and this support. This support is a 61, the Fibonacci retracement level, and the 50 also the Fibonacci retracement level. So these are the two main or the most important, the levels. The market can come down to this level and can bounce back, or even market can bounce back right from here, because there was a lot of congestion and there was also the gap. So the market has to fill the gap and just rise right from here. Or this one possibility is to come down to the 41,282 and then can bounce back a little bit, just bounce back and just retest this support. This was very powerful support that can come down and breach the support and then go up towards the 50 or 60 Fibonacci retracement levels. Or other possibilities are right here. From here it can also move upward. Why? Because there was a lot of congestion, and this time from here, from this level, you can see the market was there was this candle was rejected right here, and also this time two times it was rejected. So it is possible that the new candle can can be formed above the closing candle of the previous closing candle. So it is possible, and then this would be the level right here. That would be the 43,311, and here also market will halt for some time just to take a little breather and then go higher, or come down to 61 Fibonacci retracement. From there it can also move upward. The fourth or fifth possibility, or the probability, would be that the market can here consolidate for some time and then break out, just like it did right here. See, this is how it can also behave. So we have to be prepared for any condition or any circumstances. We have to understand. When we know what the market is doing, we can make better decisions and very safer decisions. Now let's go and analyze one script that I have chosen one script that is ATRL, Attock Refinery Limited. So this is the weekly chart for the Attock Refinery. So it's you can see it is also above the 200 EMA. So it is in an uptrend now. It is just the primary trend was in downtrend. Now the intermediate trend is in an uptrend. Excuse me. You see, these are the very important levels. You see the market has been consolidating right here. You see for longer time, and then also respected the same level on its way up, and this was also the consolidation period right here. You can see this is the zone. So now market is in that historical zone. If the market breaches this historical zone, it can go up to this level or to this level even, or if it doesn't, then it can come down. It can come down. Now what are we waiting for? We have to see excuse me, we have to see if the market respects the 200 EMA. If this stock comes down to this EMA level and bounces back from here, so it is 100% possible it can go higher, or even it can go higher from here, because there has been no halt or barrier in the recent past. So, and moreover, I can show you this. This could also act as the flag pattern, like I show you right this. Maybe let me change the color. You can see it better. So this would be the flag pattern. Also, this the pole and the flag pattern, and then we can see also the breakout, right? We can see the breakout right from here. It is okay. It is possible. Okay. Now let's go to this is the weekly chart, weekly time frame. Now let's go to the daily time frame. What is the daily? This is also weekly, but this is based on the candles. You can see there were three candles, 3 weeks or 4 weeks, just like 1 month. Now you can see the descending triangle. So descending triangle mostly are formed. This is the pattern where you can see mostly that breaks out towards the upper side. It is not not for 100%, I can't say, but it is also possible that it can break down. So what were we waiting for? We are waiting for the this second candle to break out, but you could see the pressure from the above this week due to the international, changing scenarios. But you can say that this stock has been an uptrend for a longer time, and there was a correction. That was the correction period, but it was due. So it is okay. We can wait, and this has got a lot more, a lot more potential. Now, if we check some indicators, I'm not using more indicators. People love to run after the indicators, and they use many indicators, and you can't even see the price action. So there is not a holy grail which can give you the 100% accuracy. Let's see. You see, we can use MACD and the RSI. So the RSI is also in a positive zone, but I could say it's in 70s above in the overbought zone, but it has the potential. It can to go higher, like this. Okay, it went up there, and now it is moving upward. So therefore, it is possible that this can go right to this position. Okay, and when we talk about the MACD is going upward and is giving us the buy signal on the weekly chart, but the histograms are getting a little bit weaker, so you can see the trend might change in future, but it is happening because of this the profit booking here. Okay, now let's go to the daily chart. On the daily chart, you see what we see on the daily time frame. We see it is the rising wage. It is in the rising wage, but this is the distance. You can see this code, the middle line, the dotted line, can work as the support. You see the support is so it has also supported the stock in the past. So and here also we can see the stock has taken the support right from this area. So you can see the target would be if this goes higher, and these dotted lines are also the historical areas of the resistance. So the target would be 180 if it goes higher, or then if this is the support line, that 162.18 rupees. That is the first support. It can come down to this, and this second support would be 142. 0.82 rupees. So, and the ultimate goal would be 190 rupees. That is according to the historical. You see, this is the historical support and the resistance. This is also the historical resistance. So you can see the stock can come up right here. Maybe it might go for some consolidation right here, and then can hit the 180. But at the moment, it is at 170.21 rupees. Okay. Let's go and check out. You can see the channel. The wage it has been supporting. The wage, you can see the stock came to the middle line, went up and came down, hit the support line, and tried to rise, but again hit the same and respected the trend line, and went up. So it is also possible it can come down right here, but the support in the middle is showing us that it might go up to 180 or 190 and then can come down. Okay, let's go to the hourly chart or hourly time frame. Now you see the hourly chart is telling us what is going on here. You see these are the support and resistance areas. You can see the this was the support which was respected once, twice, and thrice, even 4 times. So the stock went up. Now let me make it very clear. See, the stock went up and came down a little bit right here, and then also went up here, and then what happened? Okay, 2 times here. We made a double bottom, and then it is moving upward. So it has to go right there. This is the target, 170 or 180. This would be the ultimate target. Okay, so to say we have to wait for this the red the support line. You could see this is the support in the congested area right here. So and this is also acting as the support. So we have to see if the stock moves upward. Okay, on Monday tomorrow. Okay, let's go to the 15 minutes. What does the 15 minute chart suggest? They suggest, you see, these are the lines, that these areas, the resistance and the support, and we have the the second support. You see, this was the support right here. It acted as the support. You see here, 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 and you could see from here this was the resistance and resistance. Now you can understand the stock went up and came down, went up and came down, and made the double bottom here, you see, and then now the stock is moving upward. So this is the middle, and the middle can act as the support, and can for some time, like it acted right here. So acting right here, it is possible it can go. It never came back from the middle, so hopefully it won't come back from the middle when when you see the stock goes up from here. So traders can trade, right, so only for this from 170 to 180, 10 rupees. So this is possible. Afterwards we can see the stock coming down. Okay, this is how I analyze. This is known as the top-down analysis. So this will help you. I'm sure. I don't use more indicators. Sometimes I use some well-recognized indicators that can only help you in suggest, just like Fibonacci retracement, Bollinger Bands. Bollinger Bands mostly is used when the market is range bound. When the market is trending, I don't think the Bollinger Band can help you as much as the support and resistance can help you. And moreover, take a few 15 minutes or 1 hour or 30 minutes just to analyze your stock that you're interested in, and then just to form an opinion, and go and listen to other guys, and listen to the experts and their opinions, and watch the stock every day to be on the safe side and to be sure, and avoid the buy or sell calls by the paid gurus on WhatsApp and Facebook. So this is how you can be profitable trader in future. So I would like to also show you what I would like to show you